Looking at practice questions 2.7 to 2.9. Question number 5, preparing the income statement where there is a loss. Vincent owns a gift shop. The business's statement of financial position on 1st of July 2018 was as follows. So these are the information given. So your assets, your capitals, your liabilities. And during July, the following transactions occurred. And all of these will affect your business's bank account. So now we are actually calculating the profit or the loss of a business. A, we need to calculate the gross profit. B, profit for the month. C, record all the transactions in the ledger accounts. D, prepare the first part of the income statement. E, second part, update the capital account with the loss for the month. Prepare a statement of financial position at the end of July. Now, let's look at the first question, which is calculate the business's gross profit. In order for us to calculate the business's gross profit, we need to use few things. For example, we need to use the purchases. We also need to use the sales. So this is the only way to calculate your gross profit. So now let's just take gross profit. Equals to 7,700 minus 5,300. And we will get how much? 7,700 minus 5,300, 2,400. So this is my profit, gross profit. Now, let's try to calculate our profit for the month, which is the next month. So now we need to actually use, let's say, use different color, and then we need to minus off a few things. For example, we need to minus off the expenses that we occur, rent, light and heat, and wages. So these are the few things that will need to be subtracted to get your loss for the month, because this question we know that there will be a loss. So let's just show, like, okay, imagine we don't know and we write profit for the month. The profit for the month is the same thing. We take your gross profit, which is 2,400, how much you earn already, and subtract all the expenses that you have to pay. 1,100, 600, 1,300. And how much do we get? So 2,400 minus 1,100 minus 600 minus 1,300. I'm going to get something like negative 600. So since it's negative, it represents a loss. Negative profit means a loss. All right. So now, this one we'll only use it later on in our income statement as well as statement of financial position. Now for question C, we need to record the transactions in the ledger accounts. So all we need to do is we need to classify them as their account names. Just change all of this to a single cell. So open up all your T accounts right now, starting with furniture, equipment, bank, capital, payment. Okay, so these are the ones that will have a balance. So just write the balance on the first day, 2018, July 1st. Balance, write down. I'm just going to copy this first. Equipment, capital on the credit side, trade payable on the credit side. Furniture, your initial starting balance will be 11,200. Equipment would be 3,200. Bank 1,800. 13,600. 2,600. So after you completed all the T accounts already, we are going to record what happened here. Okay, so after you finish all your T accounts already, we have to record all these things. For example, purchases, sales, rent, light and heat, and wages. All these accounts we need to open. So there's 5 more. Purchases, sales. Just open those accounts. Rent, light and heat, what else? And wages. Once you open all of them, then we have to do it. So purchases, when we buy things, we have to use money from the bank. So since it goes in no particular order, we're just going to write it on the last day. So on the bank side, we're just going to write all the information here, then we only transfer it to their accounts. So for example, in the bank, you can write on the last day, which is 31st of July, 2018, you paid for purchases. 5,300. You paid for rent. 1,100. You pay for light and heat. 600. You pay for wages. 1,003. Lights and wages. Done all the payments, then we need to do here as well. 31st of July, 2018, we receive money from sales worth 7,700. That's it. Then just bring all of this to your accounts below. So you can see you credit purchases here, so you must debit your purchases, 5,300 from your bank. The date will be 31st July 2018. Sales as well. You debit here, you credit here. And 1st July. Rent, 1,100 credit, 1,100 debit. Lights and heat, 600. Wages, 1,300. So you've done recording all of this. Then what's happening after this would be to do your first part of your income statement. So the first part income statement only requires your purchases and your sales. So I'm just going to write here on the last day as well. Transferring to your income statement. How much? 5,300. Same thing here. Sales, transfer to income statement, 7,700. So now I'm just going to put both this amount into my income statement. Income statement for the month ended. This line. Okay. Once this is done, then we need to write sales. 7,700 less purchases. 5,300. Yeah. And then we are going to get 2,400. So this one should be in brackets if you're writing in your book. And this one, we just put a line on top. Okay, this is what we call our gross profit. So this is your first part of your income statement. Okay, so this whole portion here, we can consider to be your first part. Okay, now we're going to do the second part where we need to reduce all your expenses. So now let's write here less expenses. This is the title. So we have our rent, light and heat, and wages. So rent would be 1100, like 600, wages 1300. Before you do that, please go to your accounts and transfer them to the income statement as well. Here, here, and here. Just to close this account. So this step here is to stop the total from going up, because we are calculating everything that has been used for this period of time. So we're just gonna close this account, and any future payments we will start from zero again. For payment for wages, payment for light and heat, because the profit has been calculated for all these amounts. Okay, sales, we can close them as well. Purchases as well. So next time there's new sales or there's a new purchase, we will put in as a new account. This account is no longer open. There's no balances to bring forward because we're using it to calculate. So once you're done here, you total all of this up, you will get 2009, 2000, 3000. Let's try like that so that it's easier to see. All right. So now we're going to find that gross profit will minus 2,400 minus 3,000, we will get negative 600. So just put it in the bracket like this. And this one will be loss for the month. And that's it. You can close this account already. So this one is actually your second part. Okay, so first part is here. Second part is here. The second part involves from expenses onwards. First part is here. Okay, done. So loss for the month. Now, they ask us to update the capital account with the loss for the month. So this loss for the month actually goes into your capital account. It will reduce your capital account, so we put it here. And write income statement. Because it came from the income statement, we just write income statement on the 31st of July 2018. So now your capital will have a new balance, 13,000 here, and you write balance. You actually don't need to do this right now because this is in the future chapter, but this is how it's supposed to be done. If you don't want to do this, let's just leave it as it is and not do the balances, but you know that the net amount in your capital now is 13,600. Net amount in your capital is 13,600 minus 600, which is equal to 13,000. And then bank, you also can know your net amount. So net amount in your bank is this 1,800 plus 7,700 minus all the ones on the credit side, 5,300 plus 1,100 plus 100 plus. Okay, so the answer would be 1,200. Okay, so this is the amount that you will see here. Now, next one is we're going to do the statement of financial position. So it's the same thing as this, just that the number changed a little bit. So we're going to do statement of financial position as at 31st July 2018. You do not need to know how to write the format of the top or wording here because most of the time they're given to you. So assets will still have furniture, equipment, and bank. Okay. And we go down, we have capital, liabilities, trade payable. Now, let's put in all the values that we have. Furnitures will be 11,200, equipment 3,200. Bank is 1,200. Capital is 13,000. Trade payable is 2,600. So now we total this up together. We're going to get 11,200 plus 3,200 plus 1,200. 15,600. So this is your total assets. Now let's look at your bottom here. So assets is equal to capital plus liabilities. So the total is also 15,600. And the total are equal to each other, means that you have completed it correctly. So this one and this one, if they are the same, it means that you have fulfilled your accounting principle. Assets is equals to capital plus liabilities.